Although Kimberly-Clark's revenue and EPS missed analyst estimates, it demonstrated strong organic sales growth, marking its strongest line quarter in the last 5 years. And with the broader stock market falling to start August, longtime investors saw a discount deal, especially after they declared a regular quarterly dividend of $1.26 per share, payable in cash on October 2, 2025, to stockholders of record at the close of business on September 5, 2025. This marks the company's 91st consecutive year of paying a dividend and the 53rd consecutive year of increasing its dividend. The company's second quarter volumes were up 5%, driven entirely by increased sales rather than higher prices. This growth is attributed to the company's pivot towards lower-priced products and a refreshed innovation pipeline, which seems to be resonating with budget-stretched U.S. consumers. However, as mentioned, it's still worth noting revenue of $4.16 billion, down 1.6% from the same period in 2024. The company's net income was $441.0 million, down 3.1% from the previous year, while its profit margin remained stable at 11%. Earnings per share, EPS, was $1.33, down from $1.35 in the second quarter of 2024. Yet significant market share was gained in key categories across its largest markets while showing industry-leading productivity, enabling reinvestment for profitable growth. The joint venture with Suzano is expected to unlock potential in international family care and professional segments. However, the company faces challenges, including pressure on consumer purchasing power and a challenging pricing environment. International markets, particularly in informal economies like Latin America, are experiencing frequency declines. Michael Hsu, CEO of Kimberly-Clark, explained that the company's performance was driven by innovation and a value proposition across all tiers. Despite purchasing power pressures, the essential nature of their products ensures resilient demand. The company expects continued strong performance in the second half of the year due to a robust innovation pipeline. Nelson Urdaneta, CFO, noted that North America's shipments were ahead of consumption due to retailer inventory shifts and innovation pipeline builds. The company's pricing outlook remains cautious, with a focus on driving volume and mix while maintaining pricing net of commodity costs. They have taken targeted pricing actions and maintain a disciplined approach to promotions. The expected net tariff impact has decreased, and the company plans to increase advertising and brand support in the second half. The joint venture with Suzano is also expected to enhance their ability to deliver consistent top-tier growth, with personal care categories being margin accretive. As a result of its strong performance, Kimberly-Clark has raised its full-year guidance, expecting low to mid-single-digit EPS growth, up from a previous flat to slightly positive outlook. This includes a one-time 16-cent boost tied to its $3.4 billion international tissue divestment, which has also helped sharpen the company's focus on core North American categories. The company's performance is seen as a sign of potential recovery in the consumer staples sector, with other companies like Colgate-Palmolive and Procter & Gamble also reporting better-than-expected sales growth. Kimberly-Clark's CEO remains cautiously optimistic, warning that consumer purchasing power remains under pressure with no near-term catalyst for change. Nevertheless, if the company's turnaround plan gains traction, its positioning across value tiers could help it ride the next wave of consumer staples recovery.